Good morning, good morning, good morning. I can see people coming through. If you can just pop in the chat box for me, thumbs up just to make sure you can hear me okay. And everything's loud and clear, that would be perfect. I can see some familiar names coming through. Can everybody hear me okay? Brilliant, thank you Felix, that's awesome. Good morning to you. So, if everybody can hear me okay, I can see actually lots and lots of names on here that I recognise. So good morning to you all. Nice to see you online. Lots of names I don't recognise as well. So if you can just pop in the chat box for me where you're dialing in from. This is a global event, so we do have people that dial in from all over the world. It'd be nice to see how many people are joining us this morning, where you're joining us from, and how many countries we're bringing together with Your Freedom Empire and At Home with Hayley. Morning, Helen. Hong Kong, Stockholm, Geneva. So we've got quite a few people coming through from lots and lots of different countries. Brilliant, that's great. So, good morning. I'm back. This is At Home with Hayley. I am, of course, Hayley Andrews. We are here today to talk to you about all things property. We will be giving you a short market update, and then we have an awesome guest. So our special guest is Mr. Nick Burns from Lighthouse FX, and he's going to be talking to you about the UK economy right now. And of course, we're going to be giving you an update and answering all of your questions. I can see that we've got lots of people coming through. We've got Singapore, Hong Kong, Australia. Happy Easter, Judy. Nice to see you online. Brilliant. Awesome. So we've got lots of people coming through now. I'm going to jump off camera and get started. So actually, guys and girls, before we get started, I just want to say, obviously this year's been a difficult year. So as we look back at a difficult year, my heart goes out to everyone that has directly been affected. I know people that have lost loved ones, businesses, jobs, homes, relationships, and some themselves, unfortunately. If this is you, remember that help is out there. Reach out to us, reach out to anyone, don't suffer in silence. Get the right support and take one day at a time, and remember that the universe has your back. There will be better times to come, and it can't rain forever, and YFE are always here, and our thoughts and prayers are with you. And also on the other side of the fence as well, while it's been a very difficult year, it's been one where many have shown enormous strength and great resilience, adapted themselves, their businesses, thrived in their relationships, and understand their priorities better, with clarity and a clear path, coming out of this pandemic with a newfound self-confidence and drive. Nothing can break me mentality, and I hope that this is true for all of our listeners today. Just as a side note, and to add to this, if you have been affected financially via COVID, YFE have a COVID support package in place. You may have seen it online. And if you are interested, you can find out more by visiting our website, or you can actually reach out to admin@yourfreedomempire.co.uk and they can send you out some information. This is completely free and a support package in place to help those that have directly been affected get back on track. So as we have so many regulars online, and it's great to see loads of other people that are coming through as well, welcome, and hopefully you'll join us for many shows to come. But many of my regulars may be thinking, where have you been, Hayley? December, you said you were back January. So all I can say, or all I can do, is apologise and add that everything's better late than never. But joking aside, I've been extremely busy. Adding to my portfolio, restructuring my businesses, mentoring internationals from all over the world. Since January 2020, I've successfully mentored 38 individuals. This is by far the highest number of mentorships I've ever delivered in 1 year. So very, very busy. We've won awards, been shortlisted for many too. You may have seen that through our social media. There's still quite a few pending results as well, which we're excited to see how that prevails and what comes from that. Also, something that I'm extremely proud of, I was named 2021 one of the UK's most inspirational female entrepreneurs by Small Business Britain. Luckily for me, you don't have to be able to spell entrepreneur in order to be a great one. Wink, wink. A huge honour. Absolute huge honour to receive that recognition. So thank you for that as well. And of course, I've been doing all this, just like many of you, alongside homeschooling, cooking, cleaning, washing. You get my point. Not everything can be done on Zoom, although we've successfully transformed most of our daily lives and been able to continue and operate with using online technology, etc. Unfortunately, Zoom call can't cook the meals for you. So there's been a lot of additional things that I would normally outsource that has become my job as a wife and a mother as well. But one of the main things that I've realized throughout this pandemic is, and the harsh reality and the new normal, I suppose, for everyone out there, wait for it, I'm not Wonder Woman. And despite having the costume and wearing it occasionally, it's actually one of my favourites, Paul's too, I simply had to prioritise to avoid burnout with so many plates just spinning at the same time. And one more would have meant me dropping the ball, not something that I'm accustomed to. Also, just to add to the stress levels, I decided to move house as well. Yes, I'm a sucker for punishment. And I suppose I'm telling you all of this because I know that pretty much everyone on the planet can relate in some shape or form and will understand why I delayed the show from January to April. I'm here now, I'm here to stay, and hopefully you forgive me and haven't missed me too much. And thank you for all your lovely messages and I've received during the break from the show. So, some news then. There's some very exciting things happening with me personally, YFE and our students. TV is on the cards, something I'm extremely nervous about. So you'll be seeing a lot more of YFE as a result, and our awesome mentors and teams too. So get signed up for our mailing list to keep updated. You can do this by visiting our website, www.yourfreedomempire.co.uk. Webinar dates have also changed and will be hosted once a month on the first Friday of every month, a 9 AM start as usual, but we're not airing all full or all webinars public on YouTube or Facebook this year. And so we'd encourage you to join us live as a result or become part of the YFE family to get unlimited lifetime access and unlimited viewing time. We also have our YFE Alumni Support Studio. For those of you that have this as part of your training packages, this is coming live on the third Friday of every month, hosted by the one and only Mr. Glenn Newson. If you're not part of the YFE Alumni, then you can purchase the support package through our website at a very competitive price. We won't be beaten on price. That's the last of my plugs, I promise. So get your notepads and your pencils ready and let's get on with some updates, guys and girls. So, would you believe it? We are in the strongest spring sellers market in the past decade. But what does this mean? Well, if you have a property you want to offload, aka sell, now is very much the time to do so. The number of sales agreed for the first week in March is up by 12% on last year. And with us moving into traditionally the busiest prime time of the year, demand from buyers is strong and set to increase. With the daffodils blooming and the leaves becoming green, buyers have that added spring in their step. And with the added incentives in place, the stamp duty holiday being one of them, which is now extended to June and tapered off to September. Actually, on that note, pop in the chat box your thoughts on this. I'm intrigued. Did you want the stamp duty to end March? Were you one of the ones hoping for it to be extended? And just pop a comment why as well. It's very mixed bag views on the stamp duty holiday and the further extension. Anyway, we also have the government's help and the return of the 95% mortgages, which means this spring-summer frenzy is set to show record highs. So fasten your seatbelts and get ready to ride that wave. At home with Hayley wouldn't be true to form without a few stats. If you love stats, give me a hell yeah in the chat box. If not, maybe tune out for the next few minutes because I'm going to give them to you anyway. So, lockdown. Is it a dirty word? It's destroyed many businesses and many relationships too, but how has it helped people? Let's look at the positive side of this. Well, it's helped a third of UK home buyers get onto the property ladder. Research found that 27% of recent home buyers said restrictions of lockdown meant they were able to save enough for a deposit, with 46% of those surveyed stating that the reduced spending activities is what helped them to get on their foot onto the property ladder. 33% said from working from home and not having to commute helped massively. And that overall reduction of social activities coupled with the travel cost savings helped them save around 10% overall. And 5% of them surveyed said that they actually saved on rent, moving back home with mum and dad, lucky mum and dad, which has allowed them to save enough for a deposit to get their foot in the door and onto the property ladder. So let's look at some averages or average house prices per region with March data. So this is March 2021. These stats are from Rightmove House Price Index. So we have Scotland averages or average purchase price in at £165,000, which is up 3.8% on last year, with the average time to sell coming in at 40 days. So fairly quick turnaround in Scotland. North East averages in at £159,000, up 3.8% on last year, with the average time to sell coming in at 62 days. York and Humber is coming in at £205,000 as an average, up 4.8% with average time to sell at 58 days. Northwest coming in at that's a different area. Northwest is coming in at 214,000, up 6.5% on last year. Although actually on a monthly average, if you look at it, February to March, and January to February, the monthly average is actually down, which is quite interesting for the Northwest. Average time to sell is coming in at 57 days. We have the West Midlands, of which you all know I'm a champion for the West Midlands, in at £242,000, up 4% on last year, with the average time to sell coming in at 60 days. East Midlands at £242,000, up 5.2% on last year's figures, and average time to sell coming in at 59 days. East of England at £371,000 average purchase price, 4.1% up on last year's average time to sell coming in at 60 days. London sitting at an average of £624,000, and this is actually down on last year's figures by 2.2%, and the average time to sell is 71 days. South East at £421,000, up 3% on last year, and selling time at 64 days. South West is coming in at slightly cheaper, £323,000, still up 3.2% with average time to sell coming in at 61 days. And finally, Wales at £215,000, up a whopping 8% on last year's stats, with average time to sell coming in at 62 days. Properties are not hanging around for long, people, and we are in a prime seller's market. So if you do have any stock that you are looking to offload, now is very much the time to do that. Which is why it has been increasingly more difficult for sourcing agents in the market and more difficult purchasing below market value. And I say more difficult because it's more difficult, not impossible. We have, of course, been buying at a premium price, and it is predicted that the market will fall this year. To what extent and when is anyone's guess. The summer months is definitely going to continue producing record highs, in my opinion. And when we see or if we see a fall, it is now looking likely to be, due to various different factors, September through to autumn and winter months here in the UK. Many people say, should I wait, Hayley? Is there a right time to buy? Should I wait for the market to fall? Should I be taking that step now? And it's a common question that many people ask me. And the answer is no. We can make money in any market. We just have to adopt and change our strategy. History will show you peaks and troughs in the housing market cycles. House prices always eventually go back up. History tells us that. Property is a marathon, not a race. And in my opinion, the real wealth is holding property for long periods of time and getting great cash flow from my assets. And guys, and I'll cover this off, and I'm sure Nick will cover this off as well. Although we are buying at a premium price and the market may fall, it is predicted that the recovery will be fairly quick. So it's not going to be the same as the crash in 2007, 2008. It's going to be more of a correction, in my opinion. So commercial to residential is a great strategy right now. Development also, freehold to leasehold, serviced accommodation, especially over the next 18 months, will do very well here in the UK. As a result of travel restrictions and public confidence in holidaying abroad, many people will opt to stay in the UK. This year, in my opinion, is going to be the most interesting year ever. And I, for one, am super excited to see what it holds for me and the growth of my businesses. I'm not going to harp on too much about this because Nick is going to talk about this in depth shortly. But while the economy is the worst recorded in 300 years, and in comparison to 2007, 2008, it's a blip to what stats are showing now. It is predicted that it will bounce back fairly quickly, and I firmly believe that this will be the case, and I can see this in many of my business forecasts. I think it's going to be a correction, not a crash, for the housing market. Key is to spread your risk, be professional and realistic, have multiple income streams, and always have a backup plan, a solid exit. The market is always changing, and we will lose if we don't adopt and change with it. This has always been the case. To be a property investor, you have to invest. And I say that with a smile in my face. It's not about waiting for the right time to buy. It's about identifying the current opportunities in the market to take advantage of. So pick up the pace and make it happen, is what I say. So what else? So exciting times really for our analytical listeners out there. It's like Christmas for me. Why, may you ask? Well, ONS, a government data that's a great source of information for our research, is showing the new census, which is carried out every 10 years by every household in the UK. And the new one was carried out on the 21st of March, 2021, which means we have a whole new load of data to sift through to help us understand our audience, and of course our areas of investment or potential areas of investment, and also monitor and track changes and patterns of our current areas of investment, all of which I'm super excited about. Those of you that know me know that I'm a research geek. I can't help it. Love it, as Kevin Keegan would say, love it. So if you want to geek out, get checking that out. That's www.ons.gov.uk. We've spoken about sales and a bit about the current marketplace. So let's have a look now from a rental perspective. According to the data from Rightmove Index, asking rents in some parts of the UK, the UK's biggest city centres saw an annual fall of 12% in the last quarter of 2020, and some tenants swapped their centres for suburbs. Inner London has been the hardest hit, with average asking rents falling annually by 12.4%, followed by Edinburgh city centre down by 10% and Manchester city centre down by 5.3%. Not sure why Birmingham's stats are not on there or reported, but anyway, moving on. The number of rental properties on Rightmove more than doubled in some city centres, with the biggest jump in Leeds with a plus of 179%, in London plus 139%, and Nottingham at 139%. Outside London, asking rents rose in Q4 for the first time, leading to another record of £972 per calendar month. And London is the only region recording an annual fall, which is currently down by 6.4%. Every other region is up on last year's rental stats. Tenants have a lot to choose from, so make sure your properties stand out, make sure you are competitively priced, and think about what makes your listing unique. You were born to stand out, so why try and fit in? Be different, be bold, and be fully booked or fully occupied. My portfolio hasn't changed on a whole. We still run at 98% occupancy. Our inquiries from prospective tenants and conversion rate is still as high as it's ever been, and this is across all property types. The biggest question people ask me is, are HMOs dead? And now, undesirable as a result of COVID, has demand dropped off? And the answer is no, it's not. It hasn't. We have seen no change. Communal cleaning or cleaners and broadband coverage are always high on prospective tenants' desires, perhaps a little more now than ever before. Garden space and larger communal dining spaces, but all these, in my opinion, have always been at the top of the list. We have seen HMO households come together and have a newfound respect for each other, taking care of each other, become community players, and started behaving more like a family unit instead of living separate lives just sharing the same roof. And of course, we have seen the opposite too, where tensions have been high and personalities have clashed as a result of spending more time together in the home. There has been the odd, he stole my cornflakes, and so-and-so spends too much time in the bathroom, she leaves all of her clothes everywhere, and he's too loud on the PlayStation. All valid, all things that need to be considered, and all common complaints from HMO tenants pre-COVID, during COVID, and I predict to continue post-COVID too. Nothing new here and nothing negative to report. It's very much business as usual. En-suites are, of course, more desirable, but again, it will come down to affordability, area, tenant profile, and again, no different to normal. We have always, as professionals, had to do our research to show and understand what to put to the market and where to place ourselves within that market. Always check out the competition and weigh it up with the demand of prospective tenants. If you're unsure, speak to local lettings agencies in the area, put a dummy ad out, see what response you get. Look at the local area and the employment and the people living locally. Always, always understand your audience, and more importantly, understand if the demand is already being met. The last thing you want to do in your business is buy in areas that are saturated and then have to battle with other listings, either offering a much higher quality product or property for the same rent as your competitors, or dropping your rent because it becomes a price war, all of which will ultimately affect your bottom line and your return on investment. So enough of me babbling on. Shall we hear more about the UK economy, or in depth and from someone that's much more respected from this point of view, and much more qualified to actually give you statistics and talk about this arena, from our first guest this year, might I add, Mr. Nick Burns from Lighthouse FX. Nick, are you there?
Hello, good morning. I am indeed. Hello, everybody. Good morning.
Hello. So welcome to, well, it's not actually not my sofa anymore, so I can't say that. Welcome to our virtual sofa, shall I say.
Thank you for having me.
Thank you for listening this morning. I'm excited to hear what you've obviously put together for our listeners today. Guys and girls, if you can show Nick some love in the chat box. He can't hear you, so say hi and give him some love. But Nick, can you just introduce yourself for those of the people that are on the call that don't know you? And also just tell us a little bit about what you're going to be covering off today with us.
Yeah, sure, absolutely. Yeah, so I run a company called Lighthouse FX. We're foreign exchange specialists. So we help clients, high net worth individuals, companies, property investment a lot of the time, exchange currency from one to the other to begin their investment journey. As part of that, we obviously follow the economy, how the economy is performing, a lot of the fundamental data, so that we can get a better gauge as to what's going to happen in the currency market. And so I'll be talking this morning a little bit about what's been going on, what's likely to happen in the future, and how things look at the moment. And there were some interesting points that you raised, Hayley, actually, that were quite right. And I'll steal some from you if that's all right.
I probably stole it from you, so it's fine.
No. It was really interesting that you. What I thought was really interesting that I haven't mentioned in my slides is that you were talking about household saving, and so that's something that I will definitely mention as well, because there's. That's a large part of what we think is going to happen, is that because a lot of people have saved a load of money over the last little while, that there's potentially a lot of cash sitting in people's accounts that could help spark a recovery as well. So interesting times, that's for sure.
Brilliant. So I'm going to let you take the show. Guys, while Nick's talking, if you want, and girls, I always say that. So guys and girls, while Nick's going through his slot, if you have any questions about anything that Nick's talking about or anything that I covered off in the update, pop it in the chat box, and then myself and Nick will address that at the end of his slides. Brilliant. Over to you then, Nick.
Absolutely. Yeah. So, and also, if sometimes I'm guilty of speaking a bit too quickly. If I am, feel free to slow me down in the chat, or ask questions as I go. But right, so a little bit about us first, or Lighthouse FX. So we're a proud power team member of Your Freedom Empire. I'm very proud and pleased to be associated with Hayley and the team. They do excellent work, as I'm sure you all know. We do high value cross currency payments. So this is what we do all day, every day. We're foreign exchange specialists at Lighthouse FX. Our core offering, bank beating exchange rates, but the personalised service, bringing in some of this, some of the basics about the economy and all the rest of it that can help you make the most informed decisions. And when I'm talking in the next 15, 20 minutes or so, I'll talk a lot about the pound, but essentially a currency's value, or domestic currency's value, is a good gauge of how the rest of the world and the financial markets see an economy and its prospects in the future, and what's going on at the moment. So I'm going to use the kind of pound and the UK economy somewhat interchangeably, but it's worth bearing in mind that when the pound fluctuates, that this has a direct cost implication on what you're doing. So if you're from like Elaine from Australia, when the pound goes up, and you've got to sell Aussie dollars to buy the pound to buy your house, things become more expensive when the pound goes up in value. So that's kind of how we get involved as well. So UK economy. Oh, it's gone into funny text. Anyway, so of course, last year, unless you've been, I don't know, hiding in the woods somewhere, there's been quite a lot going on, and you'll be aware of the basics. But we've had in the UK, we've had the sort of finale, as it were, of Brexit, and we've had the coronavirus as well. And those two things, obviously lots of other stuff going on as well, but those two things have been the main kind of market drivers over the last year. Brexit since 2016, really, but it came to a head in the turn of the year. And essentially, uncertainty. We've seen a lot of uncertainty. We've seen with the Brexit situation, we've seen, what's going to happen to the UK? How are we going to perform when we've left the EU, our largest trading partner? how are we gonna be able to import easily? Are we going to export to the EU? All these questions. And broadly speaking, financial markets hate uncertainty. And so we've seen the pound devalue because there's a lot of uncertainty about the UK economy. And in addition to that, we've of course had coronavirus. And so in the UK, we were quite hard hit. So our numbers were quite high. We've had some quite stringent lockdown measures. And no matter what you think about lockdown, whatever you think about the responses to the coronavirus, lockdowns effectively limit business activity and consumer activity in the UK because people aren't going out to the pub or they're not going to the theatres, this, that and the other. And so there's less kind of money turning. And so that's a really bad thing. And so what we've seen in the financial markets is that the more heavily a country's been locked down, the weaker that domestic currency's been. And then over the last, this year, since the turn of the year, we've seen a real drive, or since the vaccination was kind of passed by major economies, I should say, we've seen a drive to who is going to be that economy to be first out of lockdown and kind of back to normal, whatever that looks like, right? And so the UK is vaccinating a hell of a lot of people. It's been a fantastic response. And so we've seen this kind of return of positivity. So to put some figures on it, so in the most recent figures at the last week or the week before, it was confirmed that the UK economy shrank by 9.8% in 2020. So it's the worst performance in 300 years. That's a huge dip, an absolutely huge dip. And that was revised, it's been consistently revised downwards, actually. It was at one point over 11%. It's now down to 9.8%. We didn't perform too badly in the fourth quarter. And so it was revised upwards, or downwards, I should say, more positive. However, the economy is not expected to recover to kind of pre-pandemic levels until 2025. But not everyone's doing badly. There are quite a few industries and sectors that are doing rather well. The building sector's one, and obviously Hayley mentioned, the property market's obviously flying for perhaps a number of reasons. And I think it's what I found interesting about Hayley's stats was how the London market has dipped quite significantly as people are kind of looking to get out of a flat in London that they're paying a lot of money for into somewhere slightly further out with a bit of a garden. So I think that's probably quite a lot of the reason why the London market's down a little bit, but she'll know a lot more than me about that. But I thought it was quite interesting. And of course, online retailers are doing well. Oh, Jeff Bezos is doing all right, isn't he? So there's quite a few people doing well. Coronavirus impact. So this is the big one, and realistically, the main driver of how financial markets are seeing the economy, and that's the pound's value for sure. So Chancellor of the Exchequer, Rishi Sunak, he said late 2020 that our economic emergency has only just begun. Scary words, right? But I think really this is all part of a process of managing expectation. And as I said, so restrictions on the business has led to a significant uplift in unemployment. Unemployment's a big one at the moment that we should be monitoring. Essentially, the key things that we need to remember are the government's furlough scheme, which is basically whereby the government agreed to pay 80% of a worker's salary that isn't able to attend their job. So I don't know, beauty salon maybe employs a few people, but they're not able to go into their job. So the government's covering 80% until the salon's able to open up again. Essentially, is what's happening. Now, it's an exceptionally costly program. We've got millions and millions of people on this furlough scheme. I believe it's about 8% of the working population. So it's costing tens of millions of pounds every month, or if not hundreds, over the course of the year. But the idea behind it is that we keep people in jobs, and so when things do open up again, they've got a job to go back to, and so things will kick on immediately, as opposed to letting people or letting businesses let people go, and then we have to support them on kind of like social support, like what we call universal credit, whereby people that aren't working get a bit of support. So the idea is we'd rather support them in their job, so they've got something to go back to, rather than support them and then have to try and find them a job when things open up again. So again, this kind of, although exceptionally costly, it kind of supports the idea that there will be a short, sudden return to economic growth. However, that scheme is going to end in September. So the broad kind of thought is that, okay, so all these people are kept in these jobs for now, but when this furlough scheme ends, if these businesses aren't on their feet again and they aren't ready to bring these people back from furlough, then there's going to be a load of people that are going to be let go. So we are expecting a bit of a rise in unemployment, and it is creeping up. However, less quickly than we thought it might. So the latest figures were that the unemployment rate across the UK is 5%, and that's up from 4.9% at the end of last year, and against the consensus. So people thought, or analysts thought, it was going to be 5.1%. Minor differences, but we're still talking about hundreds of thousands of people, so it makes a big difference. So that's a bit of a positive, an early positive sign, I should say. As I say though, huge amounts of debt. So the government's response has been widely regarded as one of these kind of one of the more positive responses, sort of globally. Certainly put their hand in their pocket. It's the largest peacetime governmental spending on record. So other than, World War II, it's the most amount of money that we've spent. It's absolutely biblical, for want of a better word, and far bigger than the 2008 response. It's interesting, Hayley made comparisons with 2008. It was a blip compared to what we're seeing now. So borrowing has rocketed to 394 billion this year. That's fiscal year, so April to April. Expected to be about 164 billion next year. So and national debt has now exceeded 100% of GDP, which is really quite a scary statistic. But where's the money gone? How much is much of the expenditure's gone on the vaccine development, the test and trace program, and keeping people in their jobs through the furlough scheme, as I mentioned. And these are all things designed to get the economy going. Again, main one, vaccinations. If everyone's vaccinated, and I believe we're over half the population now, I believe, vaccinating about 800,000 people a day. I saw the last stat, which is amazing, really. Once everyone's vaccinated, there's no reason to be under these lockdown measures at the moment, as we see it. And so economy comes back to life, businesses back to work, people back to work, consumers out spending their money. And again, so on Hayley's point, so the fact that people have been able to save deposits. So we had our chief economist the other day, Andy Haldane, works in the Bank of England. He said, and he's been largely correct as well. So his predictions over the last year about how the economy is going to perform have been largely correct. So he's got a lot of weight. He carries a lot of weight. I mean, he's a chief economist for a reason. He probably knows what he's talking about. He's probably much smarter than me. Well, he is much smarter than me. But he said that he reckons that there's about a 1.5 billion pounds extra that has been saved in people's pockets across the economy. And what he said was basically that when everyone's able to go to the shops again to buy themselves some new shoes that they've been wanting, or whatever that may be, they've got this cash. They've got this cash available in their pockets that's ready to go out and spend. And he said that if only a small portion of that money is spent, it could really kickstart things and get things going again. So he believes there's going to be a short, sharp return to economic growth once the sort of shackles are let off, as it were. And of course, you'll probably be aware that we've got this roadmap out of lockdown. We were recently able to go and meet a few people in the garden. Basically, everything's going to end, or the roadmap ends in June. So that's your date. I believe it's the 12th. I don't know. I may well be corrected on that. But mid-June, apparently, we're going to be completely free and completely gone of the coronavirus restrictions. So that's the kind of date that we're working towards. But Boris Johnson has stressed numerous times that it does depend on the data. So perhaps that's his caveat to a U-turn. We're not sure. At the moment, it's June. So that's the kind of date that we're looking for. So all this debt, who is going to pay? Because of course it does all need to be paid back. And the answer is, unfortunately, it's the taxpayer. So it's the people that are working, it's the companies in the UK. Income tax will rise, corporation tax will rise, government spending is going to go down. These are things that we're not expecting immediately, but these are things that will happen over the coming years. The idea is that they're going to let the economy come back to the boil before they start becoming less accommodative with their monetary stance. So they'll start raising interest rates. They'll stop printing so much money, but they're going to let things recover a little bit first because they don't want to put too much strain on the economy. That's the idea anyway. So foreign aid budget's going to be cut. So they've cut that already. But yeah, we're not expecting these kind of wholesale changes to take place for the next couple of years. Got an election year coming up as well, so pretty certain they won't start rising taxes on the year of an election, but we'll see. So Brexit and the economy. So Brexit is out the way, as they say. So we signed a deal with the EU at the back end of last year. So we have got a trade agreement. So essentially that means that there is a little bit of certainty back in the market, bit of positivity. It's not all done. There are still some negotiating to be done on services and whether the UK are going to have access into the EU markets. That's an interesting one because it makes a large part of what we do in the UK. Financial services, stuff like architecture, law. We're a services-based economy, and we we do a lot of work in Europe, and so that was traditionally the services sector contributes about a third of the UK GDP. So it's a really big one. So there's still a lot of uncertainty there. But there's believed to be a lot of investors and investment that's been waiting for these kind of uncertainties to dissipate before coming across. And so there is, and we've seen it as well. So this year, the pound has been rocketed. It's up 6, 7, 8% against the majority of its peers. And that's because the demand for the pound is coming in, vaccine related, and also Brexit uncertainty going away. Those two things. Now that we're out of the EU, though, and we've got these kind of deal, we're also able to go and sign other trade agreements with other people. So when you're in the EU, as a lot of people will probably know, any trade agreement with another country, say the US, because that's the example that I'm using, would need to be agreed by every single member state. It means that, and everyone's got a different problem. Everyone's got a different angle. Everyone wants something different. And so trade deals seem to take a long time. Whereas now we're on our own. And we saw that as well. And a good example of how the EU work has been seen with the vaccine response. So while the UK went right, yeah, we're gonna develop these vaccines, we're gonna buy X amount right now and now, and we're gonna print all this money, we're gonna do this furlough scheme. The EU's response was widely regarded as very slow because they were arguing, for want of a better word, or disputing who's going to pay for the vaccinations, who's going to get them. And so we've seen a really slow vaccination rollout. So the euro is really suffering at the moment because they're not vaccinating anywhere near enough people as far as the majority of the consensus is concerned. And so it's a good example of how well positioned the UK perhaps is now to go out and sign some trade deals with our friends, with our US friends that we've had for many years, the world's largest economy, just one of them. We're signing deals with Canada. There's a lot going on. And so, yeah, pound's risen to the highest level since 2018. As I say, up a significant amount this year. As I do say, though, there are some lingering uncertainties with Brexit. So this is actually a good thing for international investors because it's keeping the pound down. So you need to bear that in mind. But yeah, as I say, services sector is still to be agreed or fully signed off. There's still a little bit of uncertainty. We don't know what's going to happen. We don't know if we're going to get a good trade deal with the US. We don't know how that's going to work. We don't know whether the Europeans will still, keep buying from us. We don't know whether Calais will be locked off. There's still a load of stuff going on, and there's still a lot of uncertainty. But we're heading in the right direction. How will the UK? And we have seen actually teething issues at borders and ports. linked to a number of different things. But there are definitely teething issues and disagreements still. So after everything that I've said, it could easily be interpreted as quite negative. But actually, although the situation could certainly be better, I believe there are definite positives here. As I've said throughout, the main one is the vaccination rollout. We look like we're going to be one of the first major developed nations to return to full kind of normality, which is a really good thing, and we'll see that really support the pound in the future and the UK economy. It will. The sooner we kick on, the more positivity around. And although we do expect a rise in unemployment, and I think that's kind of priced in to the price of the pound particularly, but I think it's so widely expected that it's not going to have a massive impact if we do see an unemployment rise. It's worth bearing in mind, though, that this is the highest level of unemployment we've seen. And when you compare that to people like the US, which saw unemployment rise to 14.8% at points last year, and when you think about the amount of people, interesting statistic actually, which I don't have, but it'd be interesting to know the amount of people that 14.8% represents that are not in work. And when you compare that with the 5% that we're currently on now, you can kind of see how these measures that the government have implemented, this furlough scheme, has helped to basically keep the wheels attached, as it were. You can kind of see the positives there, and hopefully the UK will reap the benefits in the coming months, years. And again, from my perspective, the uncertainty has kept the pound down low, so it's very good for foreign investors coming into the UK. And our forecast suggests that the pound will continue to rally quite significantly. Just to finish off, so this is a chart. I don't know whether everyone can see this or not, but it's going back to the 90s. So this basically is just to illustrate really that pound's recovered 7% this year, which is good for most of my clients, but we're still at a really low level. You want it as low as possible when you're buying the pound, and this is against the dollar. And you can still see just how weak all this uncertainty is really keeping the pound down low, and we don't expect it to stay around here forever. So I think it's a great entry point for internationals. But that's about all I've got, Hayley. I don't know whether you're still there.
Of course, I'm here.
Hello.
Hello, brilliant. Thank you very much. So we do have a few questions in the chat box. Guys and girls, if you do have any questions, now's the time to pop it in the chat box. I'm going to quickly go through. When you say, Nick, it's interesting to listen to what I have to say. It's actually, I find it really interesting to hear your views on pretty much a very similar topic, isn't it? Although we're looking at it from different points of view, we kind of bring our information together, and that's not planned for the listeners. Actually, I do my update and you do yours. And
that's interesting. Yeah.
Brilliant. Awesome. So again, I've taken lots of notes. You know what I'm like. I definitely have my notepad at the ready when you're speaking, Nick. So I'm going to go through a few questions. Some of them are to me, some of them we can both answer. One of them, so the first one that comes through is about your Freedom Empire support package. So that's actually nothing to do with the government. That's the support package that YFE have put together for those that have been directly affected from a financial point of view. You may have lost your job, your business, or anything like that. So if you're unsure if you qualify or not, still reach out to us, and then of course we will take you through that process. It is completely free, and it is a support package to try and get people back on track and earning, building their business and their skill base. So that's something that we've pushed out to the UK public, but it is actually open from an international perspective as well. We would just have to obviously adopt and change it for delivery in terms of the internationals that would take advantage of that package. But yes, it's very much there. So if you think that you may qualify, or we think that it may benefit you in any way, reach out to us and we can have that conversation. Okay. One of the other things, other questions we saw through here, and there's a lot of good mornings. Hello, Nick. We actually have people from New Zealand, Australia, UK, Hong Kong, Paris, Singapore, Stockholm, Geneva. So we're pretty much very, very, very much global today, which is awesome. Fantastic. I love bringing the rest of the world together. So one of the questions is actually about stamp duty, and I think it was from Helen. So Helen asked if the stamp duty holiday applied to limited companies or AKA investors. And the holiday does apply, but there is that, you still have to pay that 3% surcharge. So it's been extended now to June of the £500,000 threshold, and then it will be tapered out to 250 from June to September. But if you are an investor or buying through a limited company, then you will still be subject to that 3%. It's just the other tiers of that stamp duty chart that you would normally follow don't apply with those thresholds of purchase prices. And so that's just one thing to be aware of. So of course, it's still cheaper for us to buy as investors, because we don't have to pay as much stamp duty as we would have before, but we still do have to pay some. So just be aware of that. The other question that we had was about unemployment and the salary that you would get. So don't quote me on this. I'll actually check it out for you. But it does change area to area, and it changes through age bracket as well. But I think it's something like £58 under the age of 25 per week as an unemployment benefit. So that's the amount you would receive, and over the age of 25, I think it's something like £74 or £75 per week. Now, of course, that's just the unemployment benefit. You would also actually, depending on how they qualify, get housing support and things like that as well. And this is what Nick was talking about. It actually all comes under universal credit. And so whatever you would be qualifying for, depending on if you're a couple, you get something like £115 per week combined together. Of course, if you are living in flats or things like that, you will get help from an LHA, a local housing allowance. But all of this will be covered under the universal credit that is available to.
If you have children, you get more, and all this kind of stuff, right?
So if you're just looking at unemployment, it's quite low. You're looking at like I said, £58-ish for someone that's under the age of 25, 74, 75. It could have changed recently, and it does change area to area. So if you're living in London, for example, it would be a lot higher than if you are living in the Black Country. And so it will change area to area, but you can just check that out on your local council website, and it would state what would be available. And I'm assuming that you're asking that from your tenant's perspective, and if you have to change your profile of tenant as a result of unemployment rising. I'm not sure. Maybe pop in the chat box if that's where the point was coming from. So I think that's that. I don't think there was any more questions, to be honest. Let's have a look. So what do you see the impact? I've got some coming through now. Go on.
No. I was just. I think that's one for you, really. I mean, you're better placed to talk about the property market. I would argue the one from Elaine. What do you see the impact on the property market when furlough ends?
So, I mean, really, it's anyone's guess, isn't it? And we've been trying to guess this for over 12 months now, and I've actually got to the point where I've just figured, do you know what? Let's just watch what happens and watch the behaviour of the people that are obviously occupying our units now. Has inquiry rates changed, etc.? Are people still, in their jobs, or have they actually been made redundant, or has employment risen? And it has. And as Nick said, that unemployment has risen, not massively, but still significantly enough for it to have an impact. So I think really realistically, we are going to see that affordability is going to drop, but then it really depends on how quickly those people bounce back, and can they move on to another job. I think from a lending perspective, of course, they wouldn't be able to buy, so it is going to naturally slow that side down. But then I don't think that that's where the demand is coming from anyway. So I think we are going to see a change. How significant that change is going to be, I don't know. I personally think that, you know, if we do see a drop in house prices, it's not going to be dropping for a very long period of time. I think this year is going to be very interesting. And if we do see a drop, I think it's going to be September onwards. And of course, in line with the furlough ending and of course the stamp duty holiday as well. But then everything should, and I say should, be going back to normal by June. So we will see.
What will be really interesting, and I think this is something that perhaps is overlooked a little bit. So you've supported all these jobs for the last year, right, or a year and a half. It's going to be best part of, you know, come September. You've paid all this money, these hundreds of millions of pounds to support all these jobs. Businesses are opening in June now. I mean, like, you know, I run a business, you run a business. You want, the business owners are going to want a little bit of certainty to come back. They're going to want those few months to kind of say, right, okay, business is coming back through the doors. I can now afford to pay these employees, bring them back to, you know, to be productive and help my business kick on and all the rest of it, right? What I think is going to be crucial is those 3 months.
Yeah.
But, you know, between the June to September. See what happens. If things do go rocket, then great. I think everyone will come back, and I don't think unemployment will be quite as horrible as it potentially could be. If those 3 months are a wet wash, or we get like another wave, and you know there's this uncertainty again, then I think they'll probably have to extend the furlough scheme again, and you know we go around in this cycle. But I think those 3 months are going to be really crucial. How the businesses do, how the business owners feel. Do they feel confident to get back to, you know, bring those people back off the furlough and bring them into work again? That's one that, you know, who knows, right? But anything could happen.
That's also going to rely on people's spending as well, isn't it? So
yeah, absolutely.
People's spending behaviour.
Yeah.
So the very fact that a lot of people have saved an awful lot of money and have, you know, additional money to spend is good and is going to help. It's just if they spend it or not. That's the
Absolutely.
question. And so
Absolutely.
if June comes, and between June and September, everybody gets that pot of cash that they've saved and absolutely goes crazy because they've been stuck in the house for the last 12 months, and they get out there, they start spending money, they start, you know, then that is great for the economy and obviously will stabilize the employment market as a result of supply and demand. It's natural. But if public confidence is low, the cases start rising again, and people actually you know, quite like the way their life has changed, which is a lot of people. You know? a lot of people. I love working from home. I think it's amazing.
Yeah.
My son.
I don't like not going to the pub.
Yeah, I'll see. I've never been a pub person anyway, so it doesn't bother me. I miss the social side of it, and I will, you know, eating out is very much something that I've missed, and go into the cinema, the theatre, and things like that. So I know that from my point of view, I'm happy to get out there as soon as everything starts opening and start spending some money, you know. So hopefully that's what you know, majority of the people will be. But it depends on public confidence, and all of the confidence depends on the cases. Lots of people are not wanting to be vaccinated. What number of people is that? You know, there's a lot of moving parts here. So as Nick said, from June to September is going to be a crucial time for a lot of people. And we will clearly see what the next steps are going to be within that time frame. As I said in my update, it's going to be a very, very interesting year, and one we've never seen before. So I'm really excited about it, because there's always, we can adopt and change, so it doesn't matter.
I think a lot of people feel that way as well. I think people are, they're dying to kick on now. A lot of people I speak to are ready, been shackled in, and they're ready to go.
Yeah, absolutely. I'm really super excited about SA here in the UK, so serviced accommodation here in the UK this year and into next year as well. I think the next 18 months to 2 years is just a result of public confidence, especially those with younger children or underlying health issues and things like that, with travel restrictions and vaccination cards on the passports and things like that have been talked about. I think a lot of people will just decide to stay here, play it safe for the next year or so, and I think that is going to be a booming market as a result. And our serviced accommodation business hasn't been affected, and the occupancy levels because we've adopted and changed. This is what I try to say to people. It doesn't really matter. We need to know all of this so that we can see how we actually approach our business as a result. But what happens really doesn't matter. It's just how we react to it. And that's the most important thing, really. So we've got some more questions here. It is catastrophic. Lose your job in Sweden. We get 80% of our salary, up to the roof.
That's amazing.
Yeah, that is brilliant. Well, maybe we should all move to Sweden.
Yeah.
Yeah, actually, Sweden's a beautiful place and have the most amazing Swedish pizzas. Banana pizza, I love, or I have
banana pizza.
Banana and curry pizza. Yeah, when we were in Sweden, I think it's a national dish or something like that. Maybe
really?
Let us know about that, Helen.
And I thought pineapple was bad on pizza.
Actually, when we saw it on the menu, I was like, okay, I like banana, I like chili, and I love pizza. Everybody knows that. But putting them together, I wasn't convinced. But actually, ever since I had it, I've craved it. I crave it all the time. Nobody here in the UK will do it. It's ridiculous. Anyway. Right, can you tell us a bit more about the extra stamp duty that internationals will get after? Yes, brilliant question. Thank you, Helen. So there is an additional 2% on stamp duty for internationals purchasing in their own personal name. So this doesn't apply to a company structure. So if you have a UK limited company, it doesn't apply. It is a UK entity. Of course, that 3% still applies. But for those of you that are looking to purchase in your own personal name, after April this year, you will be subject to a further 2% on top of that 3%. So you are initially paying 5% and then following the tier through the normal stamp duty prices that will go up depending on the value of the property. So yes, another benefit of purchasing through a limited company structure, you have that limited liability. Of course, you always need to speak to your accountant. I'm not an accountant either. You're not, are you, Nick? I never know with you. You've got one
I'm rubbish with accountancy. Yeah.
So you always have to speak to an accountant and tax advisor, but that is one of the benefits if you are an international purchasing investment properties here in the UK through a limited company. You're not subject to that additional 2% that's coming in April. Great question, Helen. Right, okay, I don't think we've got any more questions coming in. We've got loads of highs and hellos and hell yeses and things like, which is great. We always have a super positive group, which is fantastic, and I'm thrilled that it's from so many different parts of the world as well. And so I think we're about done. So guys, I'm going to do a quick update just on events that are coming up. But Nick, I'm going to say thank you ever so much for your time. I'm going to love you and leave you, and I'll see you again soon.
Thank you very much for having me, Hayley, and thank you everyone. Speak to you soon.
Take care. Bye-bye.
Bye-bye.
Right, so I'm going to just quickly go through with you a few events that we have. So you can now register for our free webinar. So if you register for our free webinar, you get the Freedom Blueprint. You can do that through our website, so www.yourfreedomempire.co.uk. And if you pop onto the Education Hub through the options menu, you will be able to select the free webinar there. So get yourself booked onto there. We talk all things property. It's very useful, and of course you can still download that free blueprint as well. We also have our Property Success Convention. So we've had nice intimate rooms, so small rooms, typically less than 20 people, which is great. And we're actually keeping it that way. As a result of being able to get to know you better, answer all your questions, and actually it's just much, much more beneficial to the people that attend. So those of you that haven't already, or those of you that, even if you have, you can always learn something new. And so come along to our Property Success Convention. It's a 2-day event. And you can sign up again to that through our website, and there is an option there through the Education Hub. We talk all things property. We have some of our power team come in and talk to you about specifics in their field. We talk about tax, we talk about structure, we talk about lending, we talk about the economy as well. Nick will be there talking about currency. And so we do cover off a hell of a lot of topics, and those of you that have attended more than once have always learned something new. So pop along and get registered for our next event. Then, of course, we are still doing, or we're bringing back, with my short break, we are now bringing back our free consultation calls with a YFE mentor. It will either be myself or one of the team. But if you'd like a free, no obligation, and it genuinely is there to help, there's no upsell or anything like that, you can have 30 minutes free to talk to a property expert and see how we can help you, maybe answer a few questions around your specific situation, and just help you move along. So that's proved very, very useful for many, many people that have booked in throughout last year, and it was very popular, so we've brought that again this year. So if you'd like to book that free call, you can pop along to our website again. On the Education Hub, under the option menu, you will see book a call with a mentor. And then, of course, as well, if you do have any questions or if there's any topics that you would like to cover, it will be great for you to email them across to us, because we can make sure then that the events and the webinars are tailored to the questions that are being asked, and make sure that we cover off those topics in depth, and it's more valuable to you as the listener. So if you have an idea of what particular type of topic you'd like us to cover, if there's any strategy you'd like us to talk about, or anything that you're finding difficult in your investment journey right now. I know that deals is always a big thing that a lot of people have been struggling with over the last 12 months, making them work, and also lack of deals from sourcing agents, just as a result of the competition in the market and house prices being so high. Hopefully we will start to see that change now. I know that a lot of them have adopted and changed their business model to source different types of strategies as a result of the current market. So anything like that, if there's anything that you want to cover, pop an email along to admin@yourfreedomempire.co.uk, and let us know what you'd like us to cover. And then I'm just going to quickly pop and check the chat box here, because there's a few more that have come through. They're just all thank yous. I've missed you all too. It's been lovely to be back on line with you all. So I'm going to say it's that time of the day. Thank you ever so much for joining us. It's been an absolute pleasure. It's Good Friday as well, so happy Good Friday to you. Easter weekend, which means not only pizza this evening, but also chocolate, which is obviously just a win-win for me. So I'm going to love you and leave you. Hope that you have an awesome weekend. Thank you for joining us. Hopefully we will see you on the next show, which is on the 7th of May at 9 o'clock in the morning, UK time. Have a happy Easter all, and I'll see you all again next month. Goodbye for now.